Welcome back, everybody. Sive Morten is here with the Forex Peace Army.com. Let's take a look at the Forex market, in particular on euro currency and British pound. Today we discuss these two currencies. So, returning back to the things that we talked about in the weekend, we were considered a possible retracement out of this resistance line because overall action was really fast. And we said somewhere around 1640, 1650 area, it's potentially the confidence support that we could consider for possible long position taking. So we consider it's normal bullish pullback that should happen. Situation turns a bit different. So around 1640 support, we haven't got any. Actually, even hints on a potential bullish action. Market just dropped down almost back to the lows of the Friday session. Overall situation looks a bit complex for analysis because nominal trend currently, if you take a look on the weekly time frame, daily and intradays, everywhere we have the bearish trading context. We have bearish trend direction. Even more, since here we have sharp trend change by the May City into bullish, I could even show you. So take a look. On Friday, trend has been confirmed on the bullish side, but on Monday it has been confirmed back down on the bearish. I would treat this performance as a synthetic and kind of the bearish grabber pattern, which makes it really tricky, and potentially it could suggest further downside action. That's the first moment. But the complexity stands even higher because the gold market, if you take a look, shows absolutely different performance. It shows upward continuation. Now, the question about this situation, so if we suggest that market will reach either 1560 or even 5025 support area, whether the bullish context or potential bullish pattern, in the context we have bearish, but potential bullish reversal pattern, will it be broken in this case? I would say not at all. So if only we will see that market breaks all support areas, start dropping down to the lows, that's probably might be the reasons to worry about. Because if market will reach either of these levels, potentially we could get as possible head and shoulders. So in this case, the right arm still will be formed, and at the same time we could get the big butterfly pattern. So that might become the left wing of the butterfly, right, for a possible upward continuation. That might become the right wing, because overall background here, as we discussed on the fundamental part, not only this week but in previous weeks, definitely stands not in favor of the United States dollar in current situation. So we will see. But within the nearest few sessions, probably we should stay focused on this pattern that potentially could lead to the deeper downside action. So in the current circumstances with this performance, I would, well, postpone a bit any ideas on the possible position taken on the long side. So don't hurry up with this decision. On the hourly chart, on the 4 time frame chart, we have another bearish signs. First of all, it was the wash and rinse of the previous top. So you can see with this upward action, market just slightly spiked this top and collapsed. Retracement here definitely stands too big for this rally. So if overall context remains strongly bullish, hardly we would get really erasing of the whole upward action. But now market stands at very strong support. You can see that the 116 area is a confidence support and the bottom of this big candle lows. So because of this, in today's session we probably could get some pullback. That's particular what to watch for. As I said, situation stands really tricky because we have different performs different reactions on other markets, and we can't exclude that it might be a straightforward upward continuation as well. But based on the current performance in this market, how it performs and behaves in relation to this rally on Friday, I still think that this might be another attempt to move slightly lower. So it means that, now speaking about the practical issues, so if you take a look at the hourly chart, here's what we have. Big collapse. Market already has shown the pullback to the confidence area. So this area is 1655, 1667. Initially might be really nice for considering taking the short position. But take a look what has happened here. It's very important for the current moment. After the pullback, market has made another attempt to break this support area. It's confidence support. with this, you can see this very small wash and resistance, a slightly smaller, slightly lower bottom compared to this one. It means that this was an attempt to break these lows, but currently it's failed, which led us to make the conclusion that it's my work in kind of the double repo buy pattern, something like this. So failure downside breakout could trigger once again the pullback. From that standpoint, I would wait for this pullback and then think about the possible scalp short position with a possible greater A, B, C, D pattern to the downside. Yes, this currently accompanied with a big risk because, as I said, on the gold market, we have different performance. It goes up. On the Great British Pound, if you take a look at our hand shoulders pattern, you could see that reaction to the downside stands significantly smaller than on the euro currency. And particularly Great British Pound, it could actually start forming the butterfly right here, right? So that's why the risk that potentially euro currency could try to keep going higher right from these lows right back up. So it's also exists. And we should not just blindly take in short positions around resistance levels. We need to keep an eye on what will happen. But just based on the situation that we have on the actually daily chart with these big candles and actually potentially, as I said, it's kind of the combined compound bearish grabber pattern, I still think that chances that we will get a bit kind of the bigger downside ABCD on intraday chart still exist. So from that standpoint of view, just as a bottom line, what we intend to do, since market stands in strong support, we're not considering taking any position, or only if you would like to buy in the current circumstances, you could think about it. So in a long position taking if you would like to. But since we have bearish context across the board, I just would waiting for a bounce and then consider what will happen around major resistance levels. If it will be more or less suitable background for taking the short position, theoretically we could try to get some kind of downside ABCD, and once it will be completed, we will be watching for this big pattern and potential reversal on euro currency to the upside, but now from the low standing levels. That in general what we see currently on the market. Let's just see what will happen, and we'll just make an updates and adjustments to the plan as soon as it will be needed.